This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. A grain market update from Dan O'Brien, K-State grain economist, and Guy Allen, the senior economist at the IGP Institute, kickstart today's show. In two segments, they discuss corn, grain sorghum, soybeans, and wheat, as well as the macroeconomic topics of freight and the U.S. dollar. In the second segment, Dan and Guy continue their grain market conversation. Ending the show is K-State meteorologist Chip Redmond, as he says how recent and forecasted weather is creating greater fire concerns. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you very much, Shelby.
As we're looking at the grain market, starting off with corn domestically, Dan, and what are we seeing?
Well, coming out of that, the WASDE report came out on Tuesday, March the 11th. The corn supply-demand balance sheet basically was, well, it was essentially unchanged. And if anything, what's important more about the domestic numbers are, well, two things would be the trends that we're seeing. So here, 2 years ago, stocks to use were, ending stocks of 1.36 billion bushels and 9.2% stock to use, $6.54 U.S. average price at the farm level. And that was pretty much predicated on a short crop, 13.7 billion bushels. But then we had a large crop in 2023, 15.4 billion bushels, moved to ending stocks of 1.76 billion ending stocks from under 10 before, now up to 11.8%. Prices dropped basically $2 from $6.54 the previous year down to $4.55. Now we're coming into this marketing year, 2024-25. Again, we had an okay crop, but not as large as we thought until basically had a surprise in the January crop report, dropped below 15 billion down to 14.9. Ending stocks at 1.5 billion. And stocks to use of just over 10 at $4.35 price. Now we have the USDA at their Ag Outlook conference, which both my colleague and I, Guy, were at to hear it in person, came out with a projection of large increase in acres, 94 million in U.S. corn acres and 181 bushels an acre yield. Again, that'd be a record high. Haven't been over 180 before. And 15.6 billion bushel crop, ending stocks just under 2 billion, stocks to use, 12.9% stocks to use, and then projected price of $4.20. Guy, if you want to talk about the international side of corn, then we should say something about the domestic changes that happened in the sorghum stocks to use balance sheet.
When I'm looking at the international situation for corn, I'm actually putting it in the whole context of the coarse grains. This year, just to highlight, if we're looking at the major exporters for corn particularly, major exporters, their ending stocks to use is about 3.5% or less. So it's really, really tight in that situation. And one thing that we're going to see this year, and it's already happening, is in the wake of the tariff situation, is a lot of substitutions, particularly with the larger barley crop and tighter corn availability. And this is going to overflow to sorghum. It's pricing itself, particularly into the feed ration, a lot more aggressively, particularly as it's driving sort of that export trade matrix for the coarse grains complex. So just looking at non-U.S. corn production, it increased about 1.7 million metric tons to 836. That's 2 million metric tons less than last year on non-U.S. corn production. Looking at USDA feed numbers, the main thing that's driving this feed complex is the increase in the demand for feed. USDA raised total feed consumption 2 million metric tons from last month, adding about 1.3 of that into wheat and other commodities there as well. Running around the world on countries, Argentine and Brazilian corn productions are 50 million and 126 million metric tons, respectively. Really no change on that situation. Then going down to South Africa, I had the opportunity to travel there late last year with Grains Council. They've been suffering from dry weather. We have seen what is normally an exporting country reverse things a bit. They've imported over 500,000 metric tons in this current marketing year. I expect that to go up and approach 1 million metric tons, but the biggest portion of that has been white corn as its food use in that country. And a lot of those imports coming into South Africa move through the country up into neighboring countries such as Zimbabwe, Botswana, Tunisia, the neighboring countries there that are landlocked. Coming back to the major player, China, who has historically been in the top 2 or 3 importers the last 5 years. USDA dropped their import demand down to 8 million metric tons, down 2 million metric tons. And I think it's important to look at the key driver of that. We've seen a 35 million ton increase in Chinese corn production from 260 to 295 million metric tons in the last 5 years. Keep in mind, China's the second largest corn producer in the world. They have a large population. And what we've seen in the last 5 years, particularly, you notice China has accepted a lot of these GMO traits. They now have that GMO and that production technology in place. And we're starting to see that response in their yields and in their production numbers. And I would expect to see, not only in corn, but other commodities as well, as China adapts the newer technology and production practices, their reliance on imports, I think, is going to continue to fade a bit.
What about for our other feed grain sorghum, Dan? What are we seeing domestically?
Well, an acknowledgement by the USDA World Ag Board that the pace of U.S. grain sorghum exports was far below what our projections had been. I think 2 months ago we were projecting for this marketing year 220 million bushels of exports, and last month went down to 170 million. And here this month to come in and have dropped that number down to 100 million. And of course, there have been corresponding changes with anticipation of lower price sorghum going into feed rations. And I think that we'll see that probably at the end of this month, on March the 31st, in the stocks report, the grain stocks report that comes out. That'll be important. And also FSI usage still at 70 million, and that's up from sharply from 59 and 24 the year before. So sorghum, in the USDA's eyes, is dropping back to what it is. It's a very, very competitive domestic feed grain with other crops, competes based on price when we don't have a strong export market. But here in a year like last couple, 2 or 3, we had stronger sorghum exports. Now we're weaker, and sorghum finds itself in this. I should add that also on March the 31st, there is a projection. We'll have the prospective plantings report. USDA has come out and said they're anticipating corn acres to go up from about just under 91 million last year up to 94 this year. And so on that date, the stocks report and especially the projected planted acres for corn especially and for sorghum are likely to move the market. So volatility coming probably.
Just to add that, what we're really seeing in that sorghum market is the absence of China. And sure, that's in the wake of bigger corn production in China, as well as sourcing their sorghum from some other markets at the moment. Australia harvest is about pretty strong 80% market. Done. They recently had a tropical cyclone Alfred come through Brisbane and across that major producing area, shutting those down. I've heard talk in the market of China reaching out to Argentina, trying to procure a bit there as their harvest is finishing up there as well. So we've seen that Chinese premium in our market sort of disappear. Given the tariff situation, don't know if I'll necessarily see it coming back, but China just doesn't need the volume of sorghum that they had. So now our sorghum's pricing itself primarily into that feed rations, what I'm seeing, Dan, looking at the USDA numbers. Not very much of it going into the ethanol grind, but more into the cattle markets and then also into the poultry rations a bit.
What are we seeing for soybeans domestically?
Soybeans, supply-demand balance sheet, unchanged from the last February report. The only thing that they changed was to drop the projected price from $10.10 down to $9.55. And again, at the end of this month, we'll see what projected planted acres are for soybeans in the U.S. Last year, we planted 87 million acres. We were at 83.6 2 years ago, basically 87 and a half, 23, 83.6, 24. Last year, 87, projected to be at 84. And again, that trade back and forth between corn and sorghum and then part of the corn belt would be a big issue. Guy, what about on the international side?
Well, not too many changes internationally. Soybeans have really been struggling here, and I think that's highlighted. If we look at the ending stocks for major exporters for soybeans, it's above 23%. When we were looking at corn, it was down about 3.5%. So it's quite loose. I guess the world ending stocks are up 1 million metric tons to 6.1 million. The most optimistic thing in that oilseed complex is the demand for vegetable oils being driven by biodiesel demand, not only in the U.S., but elsewhere in the world there as well. We've seen soybean oil exports surprisingly strong, and that's really lending itself. On the meal situation, they did raise the ending stocks for soybean meal up 1 million metric tons. And I think, we got to continue to struggle to price that meal into the feed rations. The only optimistic thing there is we are seeing good demand from the feed sector, but meal's going to continue to be the cheaper side of that crush margin.
In the projected domestic balance sheet for soybean oil, we saw a 200 million pound increase in projected exports for soybean oil and a 150 million pound decrease in terms of biofuel use. So we're at these prices in this situation, we're seeing a trade of exports for biofuel. Still have a lot of biofuel being used, biodiesel, et cetera, but you are seeing the balance sheets reflect that some.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Dan and Guy as we continue our grain market conversation. You're tuned back into Agriculture Today, and we continue our show with our conversation with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, as we continue talking about our grain market, picking up talking about wheat domestically.
It's interesting that yesterday on the closes on the hard red winter wheat contract trade on the CME, we closed right on $6.03. So, we have these reference prices we watch at the market. I'm sure a lot of wheat producers, for both their anticipation of prices and for revenue, would like to see a 7 or 8 in front of it. But key issue is, I think, continued slow U.S. wheat exports. For the supply-demand balance sheet that came out of the March WASDE report, just slight changes, a little more, about 10 million more imports anticipated, most of that probably from our neighbor to the north, up to 140 million. No other changes other than a little bit of a decrease in exports from 850 down to 835, and those changes came basically in hard red spring wheat and in durum wheat. So that would make sense. If we have more imports coming in from Canada into the U.S., then you're competing strong with those northern border commodities, all that much more, and just have what you have. And that there was a slight decrease in the projected price down to $5.50 per bushel. Ending stocks actually up 25 million with some of the changes we've talked about. So not a lot of change. And the USDA's projection, again, from 46.1 million acres planted in 24-25 to 47 into 2025 now. Of course, we kind of know what the hard red winter wheat numbers are. They're up just a little bit. And you have sideways a little bit higher spring wheat numbers as well. So we'll see where all that goes. And if you look at I guess I would say that for what we grow in Kansas, hard red winter wheat, again, the balance sheet numbers, the stocks to use, last marketing year, 23-24 marketing year was about 49%, projected right now at 57%, and we'll see where we go with exports and as such. Guy, how about the international side?
Yeah, look, just picking up from your stocks to use numbers domestically, again, looking at the major exporters of wheat, we're looking at just under 10% at about 9.8. That's starting to get tight, but not overly tight. I guess the key thing for wheat, world production was increased 3.4 million metric tons to a record 797 million metric tons, up from slightly again from last year. So we seem to be awash with wheat to the point where we're pricing wheat into the feed ration. As I mentioned earlier, when we're looking at the coarse grains complex, and increasingly so around the world, wheat is pricing itself into feed. Really, not any major changes in some of the big picture numbers. European numbers unchanged. Russian production was unchanged, but it's tighter than it was last year. Ukraine is also a bit tighter. Combined exports for both Russia and the Ukraine are forecast to drop 13.6 million metric tons, which is quite significant from last year. That should at some point lend itself to pricing of wheat, as Black Sea tends to be cheapest wheat out there. Did have a slight increase in Argentina of just under 1 million metric tons. Australia number was increased to 2.1. They'll be planting that wheat crop here in the next few weeks. They'll commence. And exports were up 1 million tons to 26. Combined exports from those southern hemisphere countries of both Australia and Argentina was up nearly 10 million metric tons, up 9.4 million from last year. Canadian exports were held steady. Again, looking at China, their estimates were unchanged at production at 140 million metric tons, but the USDA lowered their imports by 1.5 million tons to only 6.5 million. And I would expect that number to maybe work itself lower. So, look, it's hard to get optimistic on wheat. Corn's going to lead that. At the moment, I tend to be quietly optimistic later in the year that we could see these commodity prices rally a bit.
Guy, what are some macroeconomics issues or updates you'd like to give our listeners?
Yeah, from a sort of a lackluster USDA report, the big mover in the last week has been the U.S. dollar. We've lost probably 4% or better of the value. We've dropped from 107.5 on the index down to, we saw a bit of strength today as it rallied back up to 103.8. But that big drop in the U.S. dollar should lend itself to commodity prices. I guess it hasn't followed through as much as we would like to see, but that weaker dollar is always strengthening commodity prices. Just looking at international shipping, we did see the Baltic Dry Freight Index rally a bit. It's above 1,550 at the moment. I sort of look at that as a good sign. That's an indicator the global economy is probably a bit stronger than what maybe we think with a lot of the economic news coming out. It also makes me a bit more optimistic that this disruption from these tariff trade discussions aren't going to be as disruptive as what we think. The thing I say to a lot of people is these tariffs is more going to change the trade flow, and it's a price spread relationship, not necessarily an absolute change or loss or gain in demand. So we need to keep that in mind. But I think the biggest impact from the tariff implications when they finally settle down, and they're going to take a while to settle down, is we're going to see a notable shift in what we've come comfortable with as traditional trade flows.
Did you guys see any surprises from this past WASDE report?
Really, to some degree, the USDA by indicating no changes whatsoever in the corn and soybean balance sheets, pretty much indicated to me that they were waiting for the one thing, at least on the one hand, waiting till the stocks report came in and gave them more information to confirm how much feed usage or other things there might be out there that they haven't really accounted for yet. I think that the target is aimed again at the end of the month for the March 31st situation for both stocks that will affect old crop usage for these crops, corn, grain, sorghum, wheat in particular, and then the planted acres. And the markets at this time, I think, I don't know if I'd call them docile, but seasonally we're watching U.S. weather maps and foreign weather maps as well at this time. So we're kind of shifting gears from that old crop balance sheet focus into new crop prospects, and with that, likely to have volatility that we don't anticipate. So we'll see where all that goes. How about you, Guy? Did you see anything out of that?
No, I really don't have much to add there. Yeah, I think we're moving into those weather markets. It is middle of March now, and I know my farmer friends are wanting to burn that diesel pretty quick. They enjoy doing that. And then again, looking at those southern hemisphere weather conditions as we're seeing that Argentine, Brazilian crops come off, and then planting of the winter wheat crops in the south there as well. So yeah, we're starting to enter that weather market period after coming out of the deep freeze here in Kansas.
As you both respectively look at the markets, Dan, you domestically, Guy, you internationally, how do you feel the health is of them?
Look, internationally, the big driver there is just where this change in tariff situation will finally change. And we get new news every day coming out from one side or the other, one country or the other, and it's going to have a notable impact. I think at the end of the day, when reason prevails, we'll be in a better situation competitively, but it's going to take some time to get there. We've been sitting in this situation's been evolving for the last 20 years, and we finally sort of have had enough and want a more fair and balanced playing field to trade on. So it's going to take some time to work through that little kerfuffle until things settle down. So I think we just need to be patient, and I think reason will prevail.
You know, we hear in the news discussions of at least a ceasefire that could occur in the Ukraine-Russia war, and what that might do to trade. We're unsure. However, Guy, at least in my perception, that any sanctions that there were before were leaky enough that they're almost discounted on the world stage in terms of Russia actually shipping anything. There have been ways or pathways carved out around that. So that's in play. And we hear of China and Canada having spats about this or that commodity going in. And so you've got not just the U.S. in the middle of trade discussions, but also others, ongoing issues. You know, we hear about, I think a month or so ago, we were talking about the possibility of the Panama Canal really coming into play. And now that's been, I don't know if it's completely dealt with, but major changes happen pretty quick there. So we'll see where all of this goes.
Well, the inflation numbers coming out came in a bit less than expected. I think, if we could get our hands around that, particularly on the fiscal spending side that's driving that, I think that'll help. Oil prices have come down pretty steadily since the first of the year. We're down around $66 a barrel for West Texas intermediate crude. That energy prices, and if we can sort of get this food inflation particularly under control, not only in the U.S., but internationally particularly, that will lend itself to a more settled and certain market.
Dan, Guy, I appreciate you both taking the time to join us today.
Thank you, Shelby, very much. Thank you, Guy.
Shelby.
That was K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. We're cutting to a short break now on Agriculture Today, but we'll be right back. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, this past week we've seen quite a bit warmer temperatures, and how warm did we get?
Yeah, we had temperatures getting to the mid to upper 80s for central and western Kansas, actually most of Kansas. And, it feels warm. And it is warm, but overall we didn't really break any records. It came close to some low-hanging fruit records, but overall it was just warmer than normal, not record heat by that standard. And overnight lows, too, they've been warmer than normal. We've been running about 10 degrees above normal for overnight lows through the period, too. So our average high temperatures are in the mid-50s with average lows around that 30-degree mark. In fact, over the next week, we're going to see them get to the 32-degree mark for average lows. And we're continuing to go through that pattern of gradual warming as we get into spring.
Have we also had some strong winds?
Yep, it's that time of the year. Our strongest winds on average are in March and April. And that's because of those big temperature contrasts. And we've gone up and down in temperature a little bit. We did have those warm days and cool days, and we have strong winds that coincide with those changes. And so we had breezy winds on Monday, and then at Friday, when this airs, it's going to be a very high-end wind event again. Similar to what we saw about a week and a half ago when we saw that sprinkling of snow. We won't be any snow this time, unfortunately. In fact, we're looking at almost no moisture with this system, but it's going to bomb out, basically be a bomb cyclone, going to drop 24 millibars of pressure in 24 hours as it strengthens north over Nebraska and moves off to the east. And that is going to provide a southwest flow into the state of Kansas. And that southwest flow is really warm, really dry air, but it's also going to be a really strong wind. And we're going to see winds up to 60-plus miles an hour, especially for south central and eastern Kansas. And I think the strongest will be right along the Oklahoma border in southeast Kansas. I wouldn't be surprised to see maybe even some over 70 mile an hour in a very narrow corridor in southeast Kansas. And that, combined with those warmer temperatures and the low humidity, is a recipe for extreme fire weather. And it's had a lot of people out burning recently. And a good reminder, if you do not have that fire out, you potentially could cause a significant fire that could go many, many miles and be impossible to control when we have the conditions that we had this afternoon on Friday. Unfortunately, it's going to continue with gusty winds, and a cold front's going to move through the state overnight on Friday, and that's going to shift winds out of the northwest. And so that directional change is a big problem for firefighters who can rapidly expand any fire, despite temperatures being much cooler and the humidity coming up with that front. As we go into Saturday, we'll have the persistent northwest winds that are that post-cold front winds with cooler temperatures. Overall, we'll be back near normal, not 80 degrees. And then Sunday looks to be a pretty quiet day, but we're in an active weather pattern like we've been, where we're getting one or two of these storm systems a week, and it looks like the next system will arrive potentially Tuesday into Wednesday, and that could again bring another round of fire weather concerns with strong southwest flow. We've got that weak La Nina, and that's typically in years with La Nina, we see the most acres burned in the state of Kansas any given spring. And so with this La Nina, we're seeing the weather that correlates well with dry conditions, fire weather threats, and the potential for drought expansion as well, because we're going now multiple weeks in a row with very little precipitation. We're averaging as much as nearly an inch of rain a week in the east and about a quarter inch of moisture in the west. And so we're just accumulating those deficits, and we're seeing drought expand to our south and west. And I think Kansas is going to see drought start to increase over the next week. But there is a little bit of hope. We could see some light snow with that system early next week, that Tuesday, Wednesday timeframe across northern Kansas. I'm not optimistic it'll be very widespread, but at least it's an opportunity for some moisture.
Chip, I appreciate you taking the time to join us today.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.